Welcome back to LuxWorld, where we explore the latest global trends that impact wealth and luxury lifestyles. Today, we're diving into a major policy shift coming from the world's second-largest economy, China's approval of a plan to raise the retirement age. While this may sound like a bureaucratic change on the surface, it has profound implications for wealth management, luxury consumption, and the future of China's shrinking workforce. Starting in 2025, China will gradually extend the retirement age for its citizens over a 15-year period. For male workers, the age will shift from the current 60 years to 63. For women, the retirement age will be raised depending on the type of job, with those in labor-intensive roles seeing an increase from 50 to 55, and those in other positions extending from 55 to 58. At first glance, this change may seem like a way to address labor shortages, but let's break down what it really means for wealth creation and consumption patterns in China. The shrinking workforce, a challenge to China's wealth engine. China's workforce is shrinking due to declining birth rates and an aging population, meaning fewer young workers are available to replace retirees. As the country transitions into a more service-oriented and high-tech economy, the need to retain experienced workers becomes critical. Extending the retirement age allows China to keep skilled workers in the labor force longer, which in turn helps sustain economic growth. Now, why does this matter for luxury? In a country where the rise of the middle class has driven booming consumption of high-end goods, this shift may have complex consequences. On one hand, keeping older workers employed longer means they have more years to accumulate wealth, save for their golden years, and of course, spend on luxury experiences. It extends their peak earning years, allowing them to continue indulging in luxury fashion, high-end travel, and exclusive lifestyle choices. Wealth accumulation and retirement. For China's affluent population, extending the retirement age is not just about working longer, but also about wealth management. Those who would traditionally retire at 60 or 55 will now have a few extra years to build their portfolios, invest in property, and grow their businesses. With more time in the workforce, individuals can amass greater wealth, allowing them to invest in real estate, luxury cars, fine art, and other high-end assets that are both status symbols and long-term financial investments. This change also gives China's high-net-worth individuals more time to benefit from a rising stock market, a growing private equity sector, and global investment opportunities. And let's not forget, many of these affluent workers will be spending those extra years building their legacy through philanthropic endeavors or creating family wealth plans for future generations. Luxury consumption, the silver market. Another key factor in China's wealth equation is the rise of the silver economy, where older consumers become an increasingly important market segment. With the retirement age extended, the over 50 demographic will continue to play a significant role in luxury spending. This group, often wealthier and more brand loyal, is expected to fuel growth in high-end goods, from designer clothing to luxury travel. Their extended time in the workforce means more disposable income, longer participation in the high-end consumer market, and ultimately, a greater influence on luxury trends. Imagine a 62-year-old executive with several more years of work ahead, looking to reward themselves with a luxury cruise through the Mediterranean, or upgrading to a top-tier penthouse in Shanghai. This trend is great news for luxury brands, as these older consumers tend to favor quality and exclusivity, key elements of the luxury market. Economic implications for the ultra-wealthy. For China's ultra-rich, the extended retirement age may lead to shifts in how they approach wealth management. With an eye on working longer, many may delay major lifestyle changes, like buying a retirement property or transitioning their wealth into trusts and family offices. Instead, they could focus on expanding their empires, whether that means launching new ventures, diversifying their portfolios, or investing in luxury assets like yachts, jets, or even art collections. We may also see the rise of new luxury services catering to this extended working elite. Think of executive health packages, private medical concierge services, and high-end retirement planning, all targeted at keeping these affluent individuals healthy, wealthy, and stylish well into their extended working years. Global impact and what it means for luxury markets. While this policy change is specific to China, its impact will likely ripple across global markets. China's wealthy consumers have become pivotal to the global luxury economy, driving sales for everything from French haute couture to Swiss watches. With more affluent Chinese staying in the workforce longer, we can expect a continued influx of Chinese luxury shoppers in global hotspots like Paris, Milan, New York, and London. In addition, extended work years for China's affluent could mean sustained demand for high-end real estate in international cities. Rather than retreating into retirement, these individuals may choose to maintain a global lifestyle, buying luxury properties in key cities, or vacationing in exotic destinations. Final thoughts. In essence, China's plan to raise the retirement age is not just a policy adjustment. It's a move that will reshape wealth creation and luxury consumption in the country. For the world of luxury, this means a more mature, affluent market with deeper pockets and longer careers. The silver economy will thrive, and the luxury market will see greater demand for high-end products and services that cater to this seasoned group of workers. If you enjoyed today's breakdown of China's retirement policy and its impact on luxury, make sure to like this video and subscribe to LuxWorld for more insights into how global trends shape the world of wealth and opulence. Hit that notification bell so you don't miss out on our next deep dive into the world's most luxurious lifestyles. Until then, stay fabulous!